Ladies and gentlemen, good day and welcome to the Q4 FY23 results conference call of Patel Engineering Limited, hosted by Kirin Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Supriya from Kirin Advisors Private Limited. Thank you, and over to you, ma'am.
Thank you, Kirin. Good evening, everyone. Today, on behalf of Kirin Advisors Private Limited, I welcome you all to the conference call of Patel Engineering to discuss Q4 FY23 and FY23 numbers. On the management side, today we have Ms. Savita Shivaiker, Full-Time Director and CFO, Mr. Rahul Agarwal, Head Strategic Finance, and Mr. Aditya Begar, Investor Relations and Marketing. Now I hand over the call to Ms. Savita Shivaiker, ma'am, to give you the opening remarks. Over to you, ma'am.
Thank you, Supriya. Good evening, ladies and gentlemen. A very warm welcome to all of you, and thank you for attending this earnings call for Q4 and FY23 of Patel Engineering Limited. We have uploaded the earnings presentation and the press release along with the results on the stock exchange, and I hope you all have had a chance to look at the numbers. We shall be giving a short brief of key highlights of the performance of the company in this Q4 and year-ended FY23, and then we'll be happy to answer any questions which you all may have. Let me start with the environment. The last quarter saw some significant challenges in the global environment, with signs of some developed economies heading towards recession. However, despite these facts, India's growth continues to be resilient and is seen as one of the fastest growing economies in the world. The Government of India's strong infrastructure push under the Prime Minister's Gati Shakti initiative, logistic development and industrial corridor development will contribute significantly to raising industrial competitiveness and boosting future growth of the Indian economy. In the recent budget, capital investment outlay for infrastructure has been increased by 33% to rupees 10 lakh crore, which would be approximately 3.3% of GDP, which is going to provide tremendous impetus to the infrastructure companies going forward. Speaking about the hydropower sector in India, that Patel Engineering has a dominating presence. India has classified hydropower as renewable energy and sees it as a key in its transition away from coal. India, having the advantage of abundant natural water resources with number of rivers flowing through, have huge potential to tap in terms of hydropower, which is yet to be explored. Recently, the Indian government has approved its largest ever hydropower project, the Dibang Multi-Purpose Project in the Northeastern region. It is a 2880 megawatt project located in Arunachal Pradesh. It is to be developed by NHPC Limited. We have recently been declared L1 for a part of this project, which shall be rolled out in stages. There is a huge potential in hydropower and tunneling sectors, with more than 80,000 crore of works coming up in next few years in this segment. Further, we have also forayed into micro irrigation and have bagged multiple orders in Q4 FY23 in this sector. This is the last leg of irrigation and water projects where water is carried to the fields to end consumers in villages through pipeline and canal. There is a huge potential in this segment, as there is a very essential element for development of villages which are far away from the rivers. Under the Pradhan Mantri Krishi Sinchai Yojana for 2021 to 26, there has been an outlay allocation of rupees 93,000 crore, which would benefit about 22 lakh farmers. Hence, there is a huge potential of works expected in this segment also. Although most of you may be aware, let me give you a brief background of our company. The company was established in the year 1949 and has a strong presence in the hydroelectric and tunneling and irrigation sector. The company has a consistent track record in execution of projects in both domestic and international arenas. The company has successfully completed over 85 dams, 40 hydroelectric projects, and more than 300 kilometers of tunneling, involved with generation of over 12,000 megawatt of power capacity. The company has irrigated over 5.5 lakh acres of land in India and constructed over 1,200 kilometers of road. In India, our clients are central and state government PSUs, NHPC, SJVNL, HPPCL, IRCON, CBPPL, MIPCO, Tangenco, etc. I am happy to share the company has received some prestigious award in Q4 2023. One is ET Ascent Award for Best Infrastructure Company of the Year, Railway Development. This award was received for our T2 project, which is located in Jammu and Kashmir. Number 2, Best Infrastructure Company of the Year, Water Management. This award was received for AMT2 project located in Mumbai, Maharashtra. Number 3, Construction Time Award for Best Tunnel Project of the Year. The award was received for Stella Pass Tunnel Project. We are also extremely pleased to inform that National Geography has taken keen interest in some of the prestigious projects which are being executed by our company, and they have featured them on their channel, where you get a better idea on the scale and magnitude of the projects undertaken by the company, and also a glimpse of the difficult terrain and conditions we operate in. I am happy to inform you that the right issue of rupees 325 crore has been fully subscribed, and would like to thank all the stakeholders who have shown their trust in the company. As regards monetization of non-core assets, we have managed to sell a few of our land parcels located in Telangana and have generated cash flow of around rupees 67 crore. The company has also realized 157 crore during Q4 FY23 from arbitration awards against CG. During the year, as was committed, the company on a consolidated basis has reduced its debt by rupees 500 crore in FY23 through monetization of non-core assets, surplus from projects, and partly from right issue proceeds. The consolidated debt to equity ratio has improved from 0.92 to 0.59. The inflow of these funds has a company in reducing its debt and augmenting working capital requirement for the growth. In future also, we will continue to work for monetizing non-core assets and reduce debt further. I would like to bring to your notice that out of total consolidated debt of rupees 1752 crore as on March 31st, 2023, working capital debt is around 1100 crores and term debt is around 600 crores, which will be repaid in next over 2 to 3 years. The finance cost for the FY23 is around 418 crores. Let me give you a breakup of interest cost. Interest to bank is around 226 crores. Interest on advances from clients is around 114 crores and around 78 crores towards BGLC commission charges and other borrowing costs. Now coming to order book. As you all are aware, the company mainly focuses on the hydropower, irrigation and tunnel segment amongst others. Let me tell you, the last year has been very good for the company. We received new orders of rupees around 4560 crores and declared L1 for new projects of around 3200 crores, thus taking our order book to an all-time high of around rupees 20,000 crores, including L1 as on March 31st, 2023, which has surpassed our expectation at the start of the year and gives us a book-bill ratio of around 4-5 times. Projects received during the year are mainly in the micro-irrigation and hydropower segment. It is located in Maharashtra, Madhya Pradesh, Karnataka and Arunachal Pradesh. Some of these projects are being executed along with JV partners, and our share in these 9 projects cumulatively is around 4172 crores. The major project among these is 3637 crore Dibang multi-purpose project, which we would be executing along with our JV partner, and our share in this project is around 1,800 crore. The composition and breakup of the order book of rupees 20,000 crore is as follows. 60% of our order book comprises of hydro sector and around 21% from irrigation sector, 12% from tunneling sector and rest from and others. Out of that, 54% is from central government PSU, which are AA, AAA rated, and balance 41% from state government and other authorities. With the recent influx of orders, revenues and profitability are expected to improve in the coming periods. The company has also considerably scaled up its operations. Currently, we have an employee base of more than 4,400, and our equipment base has also increased to around 1,100 crores as on March 31, 2023. Another major achievement, the company has implemented SAP across all project sites, which will help better monitoring of progress and cost of execution of the project. Now let me brief you the key financial numbers for this quarter and full year period ended March 31, 2023. On a consolidated basis, revenue from operations for Q4 FY23 is rupees 1,298 crores, which is up by 16.77% from rupees 1,111 crores in the corresponding quarter in the previous year. Revenue from operations for FY23 is at 4,201 crores, which is up by 24% from rupees 3,380 crores in FY22. We are happy to say that we have crossed more than 4,200 crore revenue in this year, which is all-time high, surpassed the guidance of 15%. This is on account of strong order book and efficient execution of work across all project sites. On a standalone basis, revenue from operations for Q4 FY23 is at rupees 1,192 crores, which is up by 14.3% from rupees 1,042 crore in Q4 FY22. Revenue from operations for FY23 is at rupees 3,817 crore, which is up by 26% from rupees 3,029 crore in FY22. Operating EBITDA on a consolidated basis for Q4 FY23 is at 180 crore, a margin of 14%, and net profit at rupees 84 crore, which is up by 298% from rupees 21 crore in the corresponding period in previous year. Our full year operating EBITDA is at rupees 625 crore, a margin of 15%, and net profit is at around 154 crore, which is up by 181% from rupees 55 crore in corresponding period in previous year. On a standalone basis, operating EBITDA for Q4 FY23 is at rupees 176 crore, a margin of 14.8%, and net profit at rupees 84 crore, up by 128% as compared to profit of rupees 36 crore in Q4 FY22. And full year profit is up by 176% at rupees 155.8 crore from rupees 56.3 crore in corresponding period in previous year. As regards the sector-wise revenue breakup, on a standalone basis, from hydro it is 57%, from tunnel 15%, and irrigation 16%, and 12% from road and other segments. Based on the improvements in the financial performance in last few quarters, along with the promising executional outlook of the company, the rating of the company has improved to BBB with positive outlook. Going forward, we expect it to improve further, which will help bring down our interest costs, thus adding to our bottom line and improving profits. On a consolidated basis, our EPS has improved from 1.51 to 3.19, and debt to EBITDA has improved from 4.29 to 2.280. As you can see, there is an overall improvement in financial position of the company. This was a small brief from our side. Now I will like Supriya to take over, and our team here shall be happy to answer any further questions which you all may have. Thank you.
Thank you, ma'am, for in-depth analysis. Now I request the operator to open the floor for the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sagar Gandhi from Future Generali Life Insurance Company Limited. Please go ahead, sir.
Yeah, hello, am I audible?
Yeah.
Yeah, so sir, my first question is on the arbitration award. So in the PPT, I could see a large number to the tune of 4,000 crores. My first question is, sir, how much of it is likely to go through over the next 4 quarters? I mean, how much of money we are likely to receive from that overall pool? Then I'll ask my second question. Yeah.
So see, the 4,000 number which you see in the PPT, that includes arbitration awards and claims at various stages. And we expect, as mentioned on the call earlier, that we expect around 200 crores from the total non-core asset realization in next year.
So receivables plus land assets, both put
Correct.
together, out of that total pool, you are expecting 200 crores in the next 2 quarters.
Next full year.
Next full year.
Yeah.
Okay. And sir, what would be your execution in FY24 and approximate margin guidance, if you can give any, for FY24?
Yeah. So see, FY24, we would like to continue, our execution. We have an order book of around 20,000 crores with a book-to-bill ratio of 4 to 5 times. But we expect around 15% revenue growth on a CAGR basis.
And margin trajectory will be better than FY23 or will it be lower?
Similar lines on this line only. 14-15%.
Thank you. Okay, around 14-15%. Yeah, thank you so much, sir. Yeah.
Thank you. The next question is from the line of Arushi Shah from Sushil Finance. Please go ahead.
Hello. Am I audible?
Yes.
Hello.
Yes, Arushi.
Little louder, please.
Hello. Better now?
Better.
Hello. Yeah.
Sorry, yes. We again lost you actually.
So I'll jump on back in the place. Just a second. Hello. Better now?
Yeah, much better.
Yeah. Okay. So one thing is what I wanted to know is we are primarily focused on micro irrigation, tunneling and hydropower, right? So would that be like high margin segments or is it like that those are the drivers for us and our primary focus going on onwards now and ahead? So how could you just give us a brief idea and a color on if it's our premium cash cow kind of a thing and our basic niche, what we focus on?
So we could hear you a little bit only in between, but we'll just take the question. That yes, our main focus and our core sectors are also hydropower, irrigation, and underground tunneling. And these are because of our niche in this business, we have tentatively getting margins a little higher margins of 14 to 15%.
Okay. And so in cases, I saw the
Sorry to interrupt, Arushi ma'am. Your audio is very low. Could you please move a little closer to the microphone?
Hello, is it better now?
Much better.
Yeah. Now we can hear you.
Yeah, I'm so sorry for the glitch. Yeah. So one more thing. So whenever I saw the entire video for the National Geography, how they covered it, very beautifully done. So keeping in mind such terrains what we work for and such difficult situations, I'm sure the cost might, take, it might be a little more topsy-turvy than what we expect. So usually we have all the pass-on clauses for the cost, or how is it?
Yeah, so we have escalation clauses in the contracts because our contracts are mostly item rated, and we have a pass-through for escalation, more than 90%.
And like other difficulties, we have already projected while bidding, we take into consideration this other difficult terrain and other cost factor in our.
Okay. So they are already taken into consideration most of the time.
Yes, sir. Yes.
Yeah, okay. Congratulations once again. If you couldn't hear me before, wonderful set of numbers. Thanks, ma'am.
Thank you.
Thank you. The next question is from the line of Manan Poladia from MKP Securities. Please go ahead.
Hello, sir. Am I audible?
Yeah, please.
So, first of all, congratulations on a great set of numbers. So my question is on the order inflow for next year. Is there an internal target that you are envisioning for the next year or the next 2 years or so?
So we had an initial target, up to achieving 20,000 crores, which we surpassed now. Next target is 25,000, but next year maybe 12 to 15% growth in the order book we expect.
Okay. Also, sir, you just mentioned that you're expecting 15% CAGR on the execution side. So that 15% CAGR, would you say is guidance just for FY23-24 or is that guidance for 2 or 3 years?
Yeah, 2 years at least.
And same for the margin as well, the EBITDA guidance?
Correct, same.
Okay, perfect. Thank you, sir.
Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead, sir.
Hello.
Yes.
Thank you very much, sir, for the opportunity. So I wanted to understand on the debt side, I mean, you mentioned about the inflows that you're looking for from arbitration or non-core assets. So what sort of repayment target we have for FY24? I mean, from currently 1,750 crores of gross debt, what sort of debt outlook we would have by FY24 end?
Yeah, so we expect debt reduction by that 200 crores approximately.
Around 1,550 crores, right?
Yeah.
And you also gave a breakup of interest cost, right? So it's also driven by bank interest plus there are customer advance interest as well. So what sort of interest payment we are looking at for FY because of this repayment that we have seen 500 crore this year and so any sort of interest cost reduction that we can expect on a quarterly basis?
Yeah, so see, most of this reduction of this 500 crores in this year has happened in Q4 and that saving in interest should reflect in next financial year.
So what sort of saving we can build in? If you can give us some indication.
See, I mean, I can just broadly give you that our average interest rate is around 11%, 11.5. So accordingly, I mean, next year that saving should be there. Maybe some new advances coming in for new projects which we have taken.
Okay. So this 500 crores, 11% is around 50-55 crores, right? I mean, ideally.
Correct. Yeah. So, I mean, plus some new advances coming in. So maybe
net impact around 25, 30
crores.
25 net reduction. Okay. Yeah. That's it from my side. All the very best. Thank you so much.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Prashant Krisagar from Unrivaled Corporate Research Private Limited. Please go ahead.
Am I audible now?
Yes.
Hello? Yeah. Congratulations on an excellent presentation and the numbers. I just wanted to ask you few macro questions. One is about your Subansiri lower hydroelectric project. Now, what is the status of that project? When you should be executing, say, the first unit or the second unit? Hello?
Yes.
Yes.
Yeah. So, can you give us the status on the Subansiri lower hydroelectric project?
See, there are 2 parts. One is the dam, which SOMA is executing, and one is the powerhouse and HRT, which we are executing. From our side, we have a plan. Our work to complete first 2 units we should be able to hand over by September.
But is it possible that the first unit may be commissioned by June?
We are trying actually because there are other elements. Apart from our work, there are other elements also there which NHPC is working with other contractors.
Okay. So that's why I was asking you whether is it possible to What do you feel the likelihood, the probability of?
We are trying. They are also trying.
Okay. Because the reason I'm asking is the power minister in his interview has said that the one unit will be commissioned by June. So I was just wondering. Hello.
Yeah, all stakeholders endeavor. That is the target. We all are working towards it.
Yeah. And second question is about the Dibang hydroelectric project. You said you are in with the joint venture with the. Who is your joint venture partner in this? And can you share some details about the project?
GR Infra is our joint venture partner.
Can you repeat it? I just missed it. GR
Infra.
GR Infra. Okay. And what is this thing, payment schedules and the terms for the project, or is it too early to say that?
Is it too early to say that, because we are just L1. Once we get the LOA, we'll get more details about it.
Okay. And for Subansari, what is the payment schedules, or have you received most of your advances, or how is it? Okay.
Subansari is item rate contract. So get monthly payment based on our work.
And what is the retention money? Because in your press release in 2020, you had said it was of 1,584 crore project. So has there been any cost overrun because of the COVID and the recent flooding which you had in Subansari?
So cost escalation is always there, and it is linked, to WPI index.
And which we will get paid as and when we execute the work.
Okay. And last question is, you talked about your execution profile for the FY24, which is very optimistic and rightly so. But there are various elections coming through in this year. So will it affect your execution profile by any chance?
No, fair question. I'll tell you, see, right now, as you see, our order book is 20,000 crores, which is excluding L1. So we already have sufficient order to achieve next 2-year execution, our guidance, our target.
No, what I'm asking you is whether you'll be able to execute in the sense of because of the political scenarios. If the political scenario changes, sort of.
No, execution per se, once we get LOA, we don't see any challenge.
Yeah, and most of these projects are from central PSUs, which are, NHPC, SCV, PPL, SDVNL. So we don't see any challenge in our project execution.
So you don't see any challenge in that process. So your guidance of that 15% increases remains constant types for next 2 years?
Yeah, more or less, yes.
Yeah, more or less. And the last part is on the outstanding part of it, which you have to receive from the projects. So what percentage do you think it can go into, say, bad debts, or the provisions have to be made for that?
So these are all government receivables. We don't expect any bad debts as such in it.
No, the penalty clause or any of that sort coming through by any chance?
See, till now, no LD has been imposed on any of our projects. Our all executions are on time. On time means within, as per contract, if there is delay, we get extension of time from the client, actually.
Okay.
So as of now, there's no, we are not envisaging any such LD or other things.
Yeah. Last question is about the National Geographic videos, which were excellent actually, and congratulations to the company for. But was it a sponsored thing where the company paid the thing, or National Geographic on its own did the videos for you? Hello?
So they have identified this landmark project and they approach us for the details actually.
But did the company pay them anything, or is it just free sort of?
We have to arrange for all the video arrangement and all.
No, but the fees you didn't have to pay them or anything of that sort. It's not a sponsored thing. Yeah?
So we have to reimburse them the cost which they incurred for arrangement.
For arrangement. Okay. Thank you, ma'am. I hope the company does well. Thanks a lot.
Thank you, Prashant.
Thank you. The next question is from the line of Rikesh Parekh from Rockstud Capital LLP. Please go ahead.
Yeah. Thanks for the opportunity and congratulations on a good set of numbers. Can we guide me on the rundown of the debt breakup for the 23, how the rundown has happened as such? I understand there was a right issue of 325 crores. So what will be the other portion as such?
No, so we have run down around 157 plus around 67, almost 225 crores from non-core assets, which is arbitration awards and real estate. And rest, some portion will have gone from right issue fund. And the rest is all from surplus operations because we had NCD dues plus other installments of loans. So all that we have paid from operations.
And what will be the repayment schedule on our debt for the next 1 year from the cash flow basis?
So next year we estimate around 200 crores for debt.
No, the contracted that is that next 1 year which is for repayment.
So next 1 year, our scheduled repayments are around 100 crores approximately.
Okay. Second thing is on the monetization. I look at the presentation list. We have almost 1,000 crores of order and land bank available. While last year full year we have looked at a 67 odd crores of monetization. So can we see any improvement?
Sorry, your voice broke in between.
Sorry, can you repeat your question? Last, we could not hear.
Last year we have realized 67 crores on land bank monetization. So can we?
So FY24 also we expect around 80 to 100 crore out of sale of land parcels.
Okay. And my last question is on the promoter stake. Last year there was a certain stake had reduced from 43 to 38%. So any further stake sale possible, or we are done with whatever the restructuring way to do?
No, we don't expect any further sale.
Yeah.
Okay. Thank you.
Thank you. The next question is from the line of Samir Palod from AUM Fund Advisors LLP. Please go ahead.
Yeah, hi. Can you hear me?
Yeah, we can hear you.
Yeah, congrats on a good set of numbers and a very informative presentation. Just one question on your overall guidance. Given that you've grown revenues from operations 25%, the order book is very, very handsome and gives you visibility for over 4 years or 4 to 5 years. Why is the guidance at only 15% for the next 2 years on a compounded basis? Are you seeing challenges in how the order book execution pans out, or is it you just want to be conservative?
No, see, overall, if you see our order book breakup, 60% is coming from hydro and 21% coming from irrigation. So hydro, normally the cycle is 4 to 5 years, and irrigation is 3 to 4 years. So considering overall factor calculating, we are fairly confident to achieve 15% growth. We can exceed, but we are confident considering overall 15% is achievable.
And my second question is that are there any other sort of sectors in the order book that you are focusing on, which could be and which you've bid for and which you could potentially win, which could be shorter duration execution that will help you achieve higher than 50% change growth over the next 2 years, which is not hydro or not irrigation, but roads or urban infra or other types of orders? Are you building that pipeline of orders as well?
See, based on the opportunity available and considering our margin requirement, if we see that opportunity, we would consider that option. But right now our focus is in our core, which is hydro irrigation and water sector also we are exploring.
Okay. Okay, thank you for that.
Thank you.
Thank you. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello, ma'am. Congratulations on good set of numbers. My question is more on the accounting side of it. I just wanted to understand, we have seen some tax reversal happening in Q4. So just want to understand, are we shifting to any new tax rate from FY24?
No, it is on account of completion of assessments and reversal of excess provisions in that.
Oh, okay. So what would be our steady state tax rate cut for tax slab for our FY24?
No, it's around 30% only.
Oh, okay. Okay, fine. Yeah, that's all from me. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from the line of Shikhar Mundra from Vivo Commercial Limited. Please go ahead.
I want to understand how is the interest cost 418 crores when we say our interest cost is 11%. How is the interest expense 418 crores?
So we explained that 418 crores, there are 3 components. One is interest on lenders bank, debt, interest on debt, which is around 220 crores. Then BG commission and other borrowing costs is around 80 crores. And the balance is interest on client advances.
Okay. And what's the interest rate on client advances? And
that is around similar, around 9-10%.
Okay. And what are the total client advances standing as of now?
On a consolidated basis, we have around 1,200 crores.
1,200 crores. Okay. And one thing I want to understand, why is the guidance of only 15? Why is the guidance so conservative of only 15% when our order inflows are so high?
So we are conservative in that. We may achieve more, but right now we are confident at least 15% will happen.
Okay. And what is the typical, like 20,000 crores is the order book we say. What is the typical time to execute an order? How many months, how many years?
So 4 to 5 years is the book-to-bill ratio.
Okay. Okay, all right. Okay, thank you.
Thank you.
4 to 5 years.
Thank you. The next question is from the line of Dipendra Jain from Jain Doshi and Company. Please go ahead.
Good afternoon, sir. Good evening, sir. My question has already been answered.
Thank you.
Okay, thank you.
Okay. Thank you. We shall take the next question. The next question is from the line of Nikhil Chandak from JM Family Office. Please go ahead.
Yeah, hi. So a couple of questions. One is, there's a slide in the PPT which gives the land bank book value at approx 1,000 crores. So what I wanted to understand is what is the plan exactly, as in do you intend to monetize this entire 2,150 acres of land? And, the cost is 1,000 crores. What would be the approximate market value of this?
So market value is also around 1,000 crores only. And what we expect is, slowly we will be able to monetize these land parcels. If you see that there are huge land parcels and you just can't find buyers immediately for everything. But we have been trying and, we'll slowly monetize everything.
But the intent is to monetize, all this 2,000 acres.
Right.
Yeah. Intent is to monetize all this.
Understood. And sorry, how come, you were saying the market value today is the
same as what the cost of this land bank is. So there's been no appreciation or depreciation.
No, it is cost is not 1,000 crore. Market value is 1,000 crore, which we are saying.
Okay, no, the way the PPT read is approx value in books. So I thought the accounting, the cost.
No, it's not like that. Approx value in books means it is not actually a book, accounted book. It is total value of the land.
So value of the land is, and these are all free of encumbrances, no litigation. I mean, are these clear titles which is easily monetizable, or how should one understand?
No,
or
the title is clear. It is mortgage to lender.
Okay. Understood. And the other question was, so obviously the EBITDA margins are healthy at 14-15%. But by the time you come to the net profit margin, there's so much of, interest, depreciation, exceptional items that you are left with a PAT margin of 3.68% for fiscal 23. So how should one understand the flow through from EBITDA to PAT? Finally, will you still be having this, element of interest depreciation so that 15 becomes, say, roughly 4% over the next 2-3 years, or should this PAT margin show some improving trend?
We expect our interest cost to go down, and then accordingly the PAT margin should go up. That is what is the expectation.
So you can see around 4,000 crore claim, which is in pipeline, which we can monetize eventually over the period of 3 to 4 years. Plus, we have land bank of around 1,000 crore, which we are trying. We are in the process of monetizing. So eventually, if you see, our debt is going to come down in 3-4 years. As we mentioned, 600. As I have mentioned, the breakup of the debt. So around 600 crore, which is a repayable debt, and which will get paid over 3 to 4 years. So eventually, our interest costs will come down, and correspondingly, our profitability will increase.
But do you think it will take that long, as in 3-4 years more, for the these land parcels to be sold and for the arbitration awards to come? Arbitration, I can imagine it takes longer, but even for the land parcel, it will take 4 years, for example?
Because some of the land parcel, like it is a large land parcel. If Tamil Nadu at one place, we have a 1,400-acre land parcel. Which would be in today's scenario, finding buyer and everything, we are not sure how much time it is going to take. But other land parcels, we will be able to monetize early. As we mentioned, like around 200 crore, we expect next year itself.
In fact, ma'am, the scenario today for real estate land parcels is, I'm saying, at the margin, positive. I mean, if you see the way real estate companies are buying land parcels, till the time the land parcel makes sense, is closer to the city and so on and so forth. So there are enough buyers in the real estate market is fairly buoyant, which is why I was surprised when you said 3 to 4 years.
No, it is not that everything will take 4 years. It is happen slowly over 3 to 4 years. And, we are looking at buyers who can give us upfront cash. So we are not looking at a development agreement where we get slowly. There are many people who are ready to do that, but we want upfront money.
Understood. Sorry, just to be sure, the land parcels are closer to the city area, or is it more how should one understand, like in terms of, is it more industrial land, residential? It could be suitable for residential.
So the land parcel which is in Tamil Nadu, around 1,500 acres, that is industrial land, and the rest land parcels are closer to the city.
Okay, perfect. Thank you so much. Thank you.
Thank you.
Thank you. The next question is from the line of Sagar Gandhi from Future Generali Life Insurance Company Limited. Please go ahead.
Yeah, sir, this is my follow-up question in addition to my first question. So, sir, this receivables or arbitration claims of 4,300 crores, of which what is already earmarked as arbitration awards in your favor is 1,200 crores. So when we say this entire thing is going to get realized over the next 3 to 4 years, I mean, is it really not very conservative in nature?
See, arbitration awards once in our favor, it is there in courts at various levels, so it will take its time. Plus, the other arbitration awards which will get into arbitration or within arbitration, that much time will be required.
And sir, of this 4,300 crores, how much will be from the central government side or pending with the central government side?
The mix would be similar to what our order book is there, but right now exactly we don't have that split.
Okay. Yeah. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Arushi Shah from Sushil Finance. Please go ahead.
Hello. Hello, am I audible?
Yeah.
Yeah. So, thank you for the follow-up question. Just one thing, do we have any maintenance capex which we incur, recurringly? And if at all, what percentage of the sales does it form?
No, we don't have, because we have to hand over the project after completion.
Mm-hmm.
So there is only 1 year DLP period. I mean, we don't have any operation maintenance. We have to do what we have to do.
Okay, so we do not incur any capex from our side.
No. That if at all this is there, it is a separate contract.
Okay. So, I mean, do we have any plans anytime soon in the coming years where, we would be incurring substantial amount of capex?
So capex will come for new projects which we are getting, but that is mostly funded from client advances. Around 1 crore capex is there year in year.
Okay. And most of it funded by the contract advances only?
Correct.
Okay, and anything which we have to put in apart from that, like any maintenance or any machinery or something like that, we don't take that into consideration, do we?
Not really, because we have a lot of machinery from our existing project which get over, so we shift it to the new project. So that's
okay. Thank you so much.
The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
So, the last 4 or 5 years have been very difficult years for us in terms of various financing problems and project delays. So we have fortunately been able to revive the company to a very large extent. So where do you think we went wrong in the past? And can you just tell us 3 things which we will now not repeat and which will correct the mistakes of the past?
Sure. So see, we went into diversification when we went into asset ownership, we went into real estate development, and now we are focusing on our core business only, which is EPC and construction business. So that is one major thing, because you do the see we have forayed into power ownership assets, real estate development and all, which took a toll on the company, which we have stopped. The second thing is projects. Government side also allocation of projects now, handover of land is happening before the project is being awarded, so there is less number of delays for projects during the execution time. So that is helping. And then again, we are also focusing on taking projects which are self-sustainable, so we can fund it from client advances, and we don't need to borrow more funds and get into the debt cycle again.
And so why are we not discounting these, disputed receivables which we have already won in arbitrage by agencies who give 20-25% less, but then they fight the rest of the cases in High Court and Supreme Court. So that would give us immediate funds. And one more thing is that what is the kind of order inflow that we are targeting for FY24 and FY25?
So, see, as far as discounting and all is concerned, we are very confident that the money will be recovered, and if such agencies come up, we are happy for discussion. We are not close to that. That is
but many infrastructure companies are doing this. Funds are very much available. If you have won at any of the lower courts, people are ready to give you the funds after discounting some profit that they want.
No, fair point. So we are also in the process of discussing. NHI has, as I understand, NHI is doing largely these kind of settlement. Like we are in hydro segment, our client is NHPC, NTPC,
No,
NIPCO.
ma'am. These are private institutions which are doing it. Private NBFCs, private foreign institutions who are.
You rightly said, but then our client is, these are the central PSUs, mainly central PSUs. So these are NHPC, SJVNL, NIPCO, NTPC, SPPCL. So right now they are not very aggressive in these kind of settlements.
No, he's talking about any settlement done by any third-party funder. I don't think there is any available, they are coming.
Yes, no, they are, right now we have not seen such interest, but we are open with these kind of settlements.
And about the order book, if you could say, what are the kind of orders that we are targeting for FY24 and 25?
So 24-25, we expect our order book also to grow around 14-15% on, so after execution.
Okay. And do we now, does our balance sheet now have to, even take on HAM projects from NHAI, etc.?
No, we are not looking at taking HAM projects.
Okay. But we will be taking on a lot of these subcontracting projects, like how we have done with GR Infra, etc.
So it is not a subcontract from GR Infra. We both are jointly bidded with NHPC.
Okay.
Contract. And we don't work on subcontract model. So we take projects directly from government.
Okay. And sir, one more question is that what is the scope of our EBITDA margins getting better with the larger revenues being executed, and so that our fixed cost will now be divided over a much bigger revenue?
So I'll explain this. When we are taking more projects, we have to increase our employee base also, so setups also. So tentatively, our EBITDA margins would remain in similar line of 14-15%.
So not much scope in improvement over there.
In terms of margin, not much, but the overall value in terms of if the revenue goes up, the quantum of EBITDA will increase.
And any chances of the promoters, their shares are mostly pledged. So any chances of the promoters, really getting these shares unpledged or, paying off the debt that they have incurred on these shares?
That will happen over a period of time, not immediately.
Okay. Thank you a lot, sir.
Thank you.
Thank you. The next question is from the line of Riken Ramesh Kopani from Capri Global. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations for the good result. Sir, I have a few questions on the order book. So firstly, in terms of inflows, you said that you would probably grow similar to what your top line growth will be. But if you could sort of outline that within key segments in hydro and irrigation, would the mix be very similar to the current order book mix, or based on what you have currently bid or the bid visibility that you have for FY24, what would be the inflow mix be like for FY24?
Very difficult to exactly estimate that, but we expect, our hydro segment will remain between 50 to 60%.
And around 20-25% from irrigation,
right,
and rest from other sectors.
Okay, so broadly very similar to the current color that you have on the order book itself, not very different from that. Got it. And in terms of execution, I see you've given details in terms of completion stage of your order book as well. So if you could outline that, is like you did mention that it's a 4 to 5 year execution period for the hydro projects, but is it a typically linear execution cycle, or based on how you have your current profile in terms of completion stage, if you could outline as to at what stage has there been any acceleration for the overall execution?
So, initial and for hydro projects, initial 10-20%, the execution is little on a lower side. And then once if the concreting stage and all those stages starts, then the execution will be higher.
So from second, third, fourth year, it is maximum. That time you can say linear. First year it is little bit on a slower side because first year 6 months goes for mobilization.
Understood. So if you could outline that in this 20,000 crores of order book, today you have outlined that about 50% is in the below 10% bucket. Over the last 2-3 years, what percentage was there in the less than 10% bucket? How has it actually progressed?
So, see, we have recently received a lot of projects. That's why that below 10% right now is higher. But over the last 2-3 years, it was around maybe 4,000-5,000 range.
Okay, got it. So this below 10% is slightly higher this year because of the new order wins, and maybe in 25 is when you could see a higher execution from these orders post the first phase, the slow phase going away.
Correct.
Got it. And lastly, in terms of the segment where you have actually pushed a lot of new order wins this year in the irrigation segment, is it, while because of the terrain and the complex nature of the hydro projects, you do a higher margin in those projects. In irrigation, if you could outline that, what are the typical margins there, and do they sort of have any inbuilt, impact from commodities or any such things in the irrigation segment?
So see, hydro segment, if you say our average margin, whatever is there, our hydro segment will give us a 200 basis points maybe higher, and irrigation segments may give 200 basis points lower.
Okay, got it. So compared to the company average, that would be the color on that. Okay, got it. Great, sir. Thank you so much. That is all from my side.
Thank you.
Thank you. The next question is from the line of Aman from Kawad Investments. Please go ahead.
लाइन पर बने रहें.
Hello. Am I audible, sir?
Yeah, Aman. Hi.
Yes, sir. Sir, I had just one question. What is your vision down the line 3 years for Patel Engineering in terms of hydro energy and the EPC segment? What is your vision to become in terms of turnover as well as also in terms of taking more advanced projects? And how do you feel Jammu Kashmir has turned out to be? Is it a successful venture, or are we facing any, struggles or any challenges, and how are we going to overcome those challenges?
Yeah, so
as regard vision, see, as we have mentioned, our vision is to be a best execution company in the sector. Like, we have strong manpower, we have strong equipment base. If you say we have consistent track record of execution of the project. Now, as regards turnover over next 2 to 3 years, our vision is to, turnover to take it to around 5,000 crore plus company.
Okay. And in terms of EBITDA, ma'am, that will be ranging from 14 to 15, or are we expecting as turnover, the volume gets spread?
Considering current order book portfolio which we have, we are fairly confident to maintain the EBITDA level at current. It's around 14 to 15%.
Okay. Towards Jammu Kashmir side, now, how are we?
Jammu Kashmir, we are comfortable. If you see, I think 5-6 projects we are working with Jammu and Kashmir, so we don't see any issue sector per se. Execution is going on full swing.
Okay, sure. Yeah, thank you, ma'am.
Thank you.
Thank you. The next question is from the line of Viraj Mahadevia, an individual investor. Please go ahead, sir.
Hi, I had a question. Out of your total debt of about 750 odd crores, the critical is the term loans, which is 650 crores. Can you give us a sense of how soon you think the term loans, you've obviously said you want to auction all this land, etc., but how soon do you think the term loans can be repaid? In the next 2 years completely?
Next 2 to 3 years.
2 to 3 years completely repaid on the term loans.
Yeah,
and for the land, okay. And for the land parcels, have you considered auctioning it on portals such as the MSTC portal, where you may have luck for particularly the larger industrial land parcels, to accelerate the monetization of some of this land, which seems to be otherwise indicative it will take 3 to 4 years. You may be able to accelerate some of that sale. Hello? Hello?
Ladies and gentlemen, the management line has been disconnected. Please stay connected while the management line gets connected back. Ladies and gentlemen, thank you for patiently holding. The management line is connected once again. Mr. Viraj, you can continue with your question now.
Thank you.
Sorry, the call got disconnected. Sorry.
No problem. Thank you. Have you considered using the MSTC portal for auctioning your land, particularly the industrial large land parcel in Tamil Nadu? You may be able to accelerate your land sales in that manner.
Fair point. We have noted. We will try to approach them for that also.
Great. They have a great portal for e-commerce auctions. A lot of the government PSUs, including, are also selling their land and buildings through that portal. And my last question is your arbitration awards in your favor of about 1,200 crores. Given that they've already come in your favor, how soon do you think that converts to cash? In the next 1 year or longer?
Considering our past experience, we conservatively feel it will take around 2 to 3 years.
Okay, so technically if arbitration takes 2 years, which is 1,200 crores, and you can sell incremental land of 200 crores minimum in the next 2 years, you should be close to debt free actually.
Our intention is the same, but let's see how the other factor works, because it is government plays a major role.
Right.
Right.
Okay, thank you. Thanks very much. All the best.
Thank you, sir. Thank you.
Thank you. The next question is in the line of Tejas Shah, an individual investor. Please go ahead.
Yeah, on the arbitration, now what you are saying is 1,200 crore is already awarded, and balance I think you have got, what you are saying, 2 to 4,000, how many thousand crores are pending on the arbitration?
Yeah, so under arbitration is around 1,400. The rest is yet to go into arbitration.
So means we have on different lines in terms of getting it in our favor, or we are going to submit for the arbitration?
No, 1,400 is under arbitration, and rest we are going to go submit to arbitration.
Okay, and normally what is the time period for once you place it for arbitration, how much time does it take to get approved or rejected, and once approved, how much time it takes to realize on an average?
Normally it takes 18 months to 24 months.
That is only for that approval or receipt of cash?
From arbitration process takes 18 to 24 months.
Okay, and once the award is given, then how much time does it take for that money to come to you?
See, if client challenges, then it goes to district court, then district court to high court, and high court to Supreme Court. This is a normal legal recourse available to the party.
But in few cases, we've seen that client under NITI Aayog against bank guarantee, they are giving money, as we realize around 150 crores in this year.
Like if you see central PSU, they normally adhere to the guideline, and they are open for release of around 75% of the arbitration process against submission of bank guarantee. So current year also we realized around 150 crore through this process.
Yeah, agreed. Then what is the cost of bank guarantee over there?
around 1%.
Per annum means per annum. Okay, great. And about the land parcels, couldn't it be realized much faster?
Yeah, we are trying. Our endeavor is to realize much faster.
Great. Thank you. Yeah.
Thank you.
Thank you. The next question is from the line of Shikhar Mundra from Vivo Commercial Limited. Please go ahead.
The land what you are having in Tamil Nadu, how far is it from the city level? Like, because I can't understand 1400 acre land, why it should take 4 years to encash it? Because you can go for industrial development, like plotting of the plots or just because there is a big demand for land in Tamil Nadu for industrial purpose. Are you debarred from doing that or you have to sell it as it is?
It's not about debarment. We don't want to invest money in that. We are focusing on our core business, and that is why as and when, we get a good buyer who can take it on.
No, but since how long you have been holding that land, sir?
So we must be holding for last 4 to 5 years, maybe more than that.
How many years?
Maybe 7, 8 years.
Maybe more than 9 years.
Power plant.
So why do you say for 9 years you could not dispose it off? How are you so sure that in next 3 years you will be able to dispose it off as it is?
Sir, our focus right now is core business. Core business is our EPC business, executing the...
Where is the land located, madam?
It is in Nagapattinam.
How far from which side of Madras, Chennai?
So Nagapattinam is actually near a port, so maybe around 200 kilometers from Chennai.
Yeah.
So it's far off from Chennai. So who will buy that land? Eventually, who will buy that land?
See, this land was purchased to develop a thermal power plant there, which we shelved off later. So now, eventually, when other industries which will be coming up there, they will buy the land.
As you rightly mentioned, this can be used for industrial development. So there.
No, but 200 kilometers from Chennai. 200 kilometers of Chennai, then you cannot go for that plotting of the land. So you have to look for a buyer only if somebody is wanting to put up a plant.
Right.
Because otherwise you cannot make 1 acre plot each and sell it off. If it is near Chennai, there will be many medium-sized scale industries. There is a big demand for the land. So this land, I don't think you will be able to sell it. You have not been able to sell it for last 9 years. You can't sell it in next 3 years because there is no concrete plans you have it in place.
Correct. I'll explain you. We had initially, when we had purchased and kept it for development of a thermal power plant on our own, that period after we went into this mode where we have to conserve and reduce our debt, we shelved that plan. So last 3-4 years we have been working on a debt reduction plan. As and when this land parcel, we get a good buyer, we'll sell it.
Sir, just tell me, what is your cost of your land, each acre? Or how much you are expecting from that land?
For 1,500 acres?
Yeah.
It all depends on the market condition.
The condition is right in front of us, no, madam.
No,
why do you think market condition means what? We know what is the market condition today in that area. Agricultural lands are available at these prices. So why do you say market condition? You have to be more specific, no?
Right, sir. That we can have a separate discussion, sir.
No, you should come prepared in Concall because this is a major investment you have made in land and your company's EBITDA margin is so low. Unless you structure your balance sheet well, you cannot make money. And as it is, you are saying that your growth plan is only 15%. Your 20,000 crore is your order book. Is it you are finding it difficult to execute the job or you are like, I don't understand because I have seen road projects, they do much faster. Okay, hydro projects may take longer time, but they cannot be so long. 15% growth when it's a peak time in the infra projects. At this time, if you cannot show growth, maybe your lack of capital or something is wrong. It cannot be 15%. You have order book and you have to mobilize it faster. Is that you have team, you have infrastructure, you have a technology. This company is very old. So your problems of banking is all over, madam. Now your problem is something different.
No, there is no problem as such. If you see last year also, current year also, we achieved 25% growth. And we can achieve more growth. As a conservative, we are giving this 15% guidance. That's we already.
And number two, I just want to understand, when you do this turnover booking, when you show this sales turnover in your balance sheet, there will be so many orders which are of the old orders, which you are doing exactly right now. So when you do the billing to your client, do you do it at your tender rate or you do it at the escalation rate?
Escalated rates.
Escalated rate. So when you say that your arbitration money which is due, is it a part of that money is because of the escalation rate, or there is something because of the delay from the client side? Is it only that the arbitration amount is only pertaining to delay because of the unforeseen circumstances, or is it because of the rate difference also they are holding your money?
See, normally rate difference they can't hold because that is clearly covered in the contract where escalation is a pass-through. Only when there is a variation thing or, for any delay from the client side, that is covered.
So there is so we trying to understand now when you are having 1,200 crores, arbitration is already awarded. So now what is the stage? Are they challenged it in a district court or in a higher court? How many pending applications are pending in various courts?
Yes, so it is all challenged under various forums.
So now out of 1,200 crores, where is it challenged? Where is it lying? Can you just give a breakup? This is lying in High Court, this is lying in Supreme Court or in a district court. So we know in how much time you are going to get that money.
Sure.
Yeah, so 1,200 crores, we are saying 1,200 crores is in various courts, district court, high court. It is not in Supreme Court. Obviously, Supreme Court would have been there, then the money utilization would be much faster. So that's how we have given a guidance in this year. That
so out of 1,200 crores, how many awards are there? Total awards consisting of 1,200 crores, how many awards are there, sir?
There are multiple awards. Around
maybe 10, 20, 15, like any number. You have you must be having the list, no, 1,200 crores. This is the award pending in district court. These are pending in high courts, and this is not pending in any court. So can you give a breakup of that level? So we know when you can get that money.
But we can send you an email. Right now,
because see, in your balance sheet, what I have looked at is, unless the arbitration comes through, otherwise we'll show a meager profit of 100 crore by doing a turnover of 4,000 crore. And the risk-reward ratio is unfavorable because you do so much of a take a risk. And your EBITDA margin is so low, and on the top of it, your PAT margin becomes even lower. It is almost like 2-3%. So anything goes here and there, the whole project becomes unviable, no? Such complicated projects should be working on a higher level of margins. I don't know why is it so low. We'll have to understand why your company has 2-3% PAT margin.
Sir, if you consider like EBITDA margin, which compared to our sector, it is fairly good margin, 14-15%, if you compare to other competitors and others. 14-15% is considered to be a fairly good margin.
Capital. 15% EBITDA margin is good when you have a faster turnover business. So much of risk is involved, no? Because of your delay in projects, and they are all huge projects. So your margin becomes very small. For a turnover of doing 4,000 crore, you can imagine, you just make 100 crore profit. Don't you think it is too low? And such a big risk involved in the business.
Sir, once you complete, I would like to answer the same. If you see, we could achieve turnover of 4,000 crore this year. Going forward, our target is in next 2 years to reach to 5,000 crore. If you see, our execution rate is not slower, it is fast. EBITDA margin is also, maybe at last 2 to 3 years, we have been consistently maintaining this margin. And we have consistently reduced the debt over last 5 years of 1,200 crore we have reduced. This year, last year also, we could reduce around 500 crores. Eventually, next year, we have given the guidance of 200 crores. And over the period, we said in next 2 to 3 years, we are planning to reduce of 600-700 crores. So eventually, you have seen our margin is consistently improving.
Okay.
And sir, we have reduced the debt from 5,000 crore level.
Sorry to interrupt right there. Mr. Shikhar Mundra, we request that you return to the question queue for follow-up questions. The next question is from the line of Priyam Kataria from IDBI Capital. Please go ahead.
Yeah, ma'am. Thanks for the opportunity. I have one question on the demand project where we have one JV with GR. So how is the work divided between you and GR? What is their role and what is our role?
It is 50-50%.
Yeah, ma'am, that's a share, but in terms of operational, how the work is divided?
The voice is breaking.
Sir, we would request you to please use your handset and be able to use the microphone while you ask the question, and I am able to hear a lot of passive noise.
So actual work division can happen once it is a LOS. Right now the partnership is agreed 50-50%. Hope I have answered your question.
We shall move to the next question. The next question is from the line of Maruti Nandan Sarda, an individual investor. Please go ahead.
Hi, good evening. Am I audible?
Yeah.
Hello. Yeah, my question is around the land parcel which we are not able to sell. So, as one of the questions which was asked before, a couple of questions. So, can we appoint some agency or some institution who can do it for us at a quicker pace? Because right now, if we sell that 1,000 crore land, that can change the fortune of the company at a pretty fast pace. That should be like at the forefront of the management. And that should be our aim to get it done like maybe in a couple of quarters rather than 3-4 years.
No, you are rightly said, sir. We are in a process of continuously monetizing our land and our claims. If you see last 5-7 years before, our debt was 5,500 crores, which we could bring it down to today 1,700 crores. And further also conservatively we are saying in 3 to 4 years we should be able to bring down to another 600-700 crores. And you rightly said we are already in discussion with 2-3 other large agencies which can help us in monetizing this land parcel.
In addition to that, are we in talks with the Tamil Nadu state government? If they can help us out in this, because it's a very big parcel and it will need some kind of help from maybe government also to get it monetized.
Fair point. We'll evaluate that option also. We'll explore that option also.
And I have one more request, if it is doable, maybe in 3-4 weeks or in a month's time, if we can have a separate call for the investors in respect of our preparation on how we are trying to monetize this land parcel, because I think that is the biggest question which every alternate investor is asking the management. So can we do that maybe in a month's time?
Okay.
I think that will be great.
Okay. Thank you, sir.
Thanks. That's all from my side. Thank you.
Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask question. The next question is from the line of Aksa Trivedi, an individual investor. Please go ahead.
Hello, am I audible?
Yeah, please.
Hello?
Yes, sir. Audible.
Hello, sir. Ashka this side. So, my question is on the sustainability of the current revenue which we have posted in this quarter. Like if we see the quarterly numbers of March 22, we again had a good set of numbers. And this quarter again we have a good set of numbers. So it is only typically for the March, or we forecast like we can see these numbers continuing in the next quarters.
So see, monsoon period, the revenue is little on the lower side. That's how you see, little fluctuation in terms of the revenues in quarter on quarter. It is not exactly comparable like that.
Okay. So can we regard this like quarter is usually like this?
Yeah, generally the fourth quarter is always the best.
Okay. So we will not be able to surpass what we have posted in next 2 or 3 quarters, right? Like this is a benchmark quarter.
See, depends upon how work will get executed and the new projects also what we received this year.
And how will be the rainfall and everything, we cannot estimate right now.
Okay. Okay. Thank you so much. Thank you for the opportunity.
Thank you.
Thank you. The next question is from the line of Prashant Krisagar from Unrivaled Corporate Research Private Limited. Please go ahead.
Thanks for the follow-up question, for the opportunity for a follow-up question. Hello. I just wanted to ask you about the Dibang project which you have got in joint venture. So what is the sharing ratio in the venture, the joint venture?
It is 50-50.
It's 50-50. Okay.
Yes.
And in Subansari, just a specific question I wanted to ask you. At the time of the press release, you had said that the order was for 1,564.42 crores. So ultimately, when you are executing today, what should be the order size?
So because it is an item-based contract and quantity-based contract, so it is based on, normally it will be more or less on the similar line. So around 1,500 plus escalation.
Plus escalation, but what should be the escalation around? Say 30%, 20%, 40%, or what?
It's normally in the range of 15 to 20%, you can consider.
Okay, 15 to 20%. Okay, thanks a lot. That was.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Ms. Supriya for closing comments.
I thank you on behalf of Kiran Advisors for joining the call. I thank you management for detailed explanation and detailed analysis for the results. Now I request you to conclude the call. Thank you.
Thank you everyone. Thank you.
Thank you. On behalf of Kiran Advisors Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.